Hey, good afternoon, everybody. This is Dennis Wilborn, the Active Trend Trader. I want to welcome you to today's session of how to make money trading stocks and options, plus a trading tip, a really good trading tip for today. We're going to be covering three things today. One, what the market's doing, a review of the indexes. Two, our trading tip. And three, I'm going to reveal a stock to you that has the potential of going up over 100% this year. It looks really, really promising. And if you trade an option on it, it's even more promising. Again, not a promise of results, but just an observation of what may be setting up for us in the very near future. So let's go ahead and get onto what we're doing. If you joined us earlier on the YouTube channel, you know that YouTube had some bandwidth issues and our initial recording was not very good. So what I've done is I've gone back in and I've re-recorded today's session, and so that you basically can have a clean, fresh video to be looking at. I think that's very important. I do not want to put out junk. I want to put out good quality videos, and if that means going back and redoing some of the work, that's fine, because you deserve the best. So remember, don't just survive, thrive in any market. We have done this in the with active trend trading. Going back to its inception, actually, but we started trading and offering our services back in 2012. Since that time, we've averaged 36% per year. On average, last year was an exceptionally phenomenal year. We had a 70% return for the year and a 75, almost 76% win-loss ratio. So definitely well above the the 50-50 probability. It shows that basically we have a good edge with the system. So active trend trading, it's a clear and simple system designed to maximize profit, minimize loss for people who are really, really busy. That's what I aim the service at, because I remember when I was working 10 to 12 hours a day, 6 to 7 days a week, I wanted to be in the market, but there was no simple system that could allow me to do that. This is and so that's how I designed my system. I wanted to basically have something that, one, had a strong edge, but also where people could trade it without spending a lot of time and without having to learn a lot of technical jargon. And so here's what we're going to do: market index review, market master trading tip, and stock pick of the week. Always remember that what we do is for training purposes. Traders should always paper trade any new method prior to the risk of their own personal capital. Here's what our P&L looked like last year. We finished up about just right at 70%. As you can see, there's what we did. We rolled forward the profits this year and rolled everything forward. And so here's where we've wound up finishing off or starting the year at a little bit over $240,000 in our brokerage account. This week we had a nice little bump up of 1.03. Normally this would be, I would present this chart based on 9 a.m. Pacific time in the market, but this actually reflects the close today. As you can see, all the indexes were up. Russell has been particularly strong going back all the way to the last part of September of 2020. We'll see if that strength continues, or is it starting to peter out? Is it starting to run out of momentum? Great question to ask yourself. So let's go ahead and jump over here to the charts. And on the left-hand side is a weekly chart. On the right-hand side is a daily chart. The two indicators I use to show momentum are the TSI and then the market forecast. So these proprietary indicators work exceptionally well on, I personally believe they work exceptionally well on showing when momentum is starting to come back in or to go back out of an entity. Allows us the ability to then plan our trades either for pullbacks or reversals off of known either support or resistance. Looking at the SPY, as you can see on the daily chart, this is the end of day. That is a absolutely phenomenal hanging man pattern that we see there. What hanging man is a bearish reversal signal. Yeah, I like to see it. I'm going to go basically, I'm going to draw a, and you see here, it came just about up to the 618 extension level. And so it could, in fact, push a little bit higher and then anticipate a pullback. What else do we have going on here? No negative divergence on a daily chart, no negative divergence on a weekly chart. Everything is pointed to move higher. If I want to trade to the upside on the SPY, I want to pick it up at a level of support. Where is that level of support? Any type of a pullback down towards 357 to 375 to 376 would be an opportunity to get long on the S&P. Stops would be just below the 8 or just below the 20, depending on what your personal risk profile looks like. Now, what else do we have? Let's go on over here to the Qs. What's interesting is the Qs and IWM. So on the Qs, daily chart broke out. We talked about this yesterday on the radar stocks and options on the radar, and the indexes on the radar. The webinar and basically live stream I do on Instagram at 12 noon Pacific time, Tuesday, Wednesday, Thursday. Join me on that. And if you have a stock you want me to review, also let me know what that is. I'll be glad to review it for you. See if it makes it basically meets the standard to be on the radar. So price action starting to move up. Now on this particular chart, what we do have is we have some negative divergence going on. Now the one thing with negative divergence to remember is that negative divergence oftentimes shows up ahead of a reversal. It doesn't mean that the reversal is going to happen like the next day, but it does show that momentum appears to be kind of slipping away. That is very evident here on the TSI on the daily chart, and to a little bit lower, a little bit less extent on the market forecast. But the market forecast intermediate line, that's that green line, has started a downward slope, even while price action is making a new high. Another thing to keep on look at as that is topping up into a upside of a channel. Oftentimes you're not going to go much past that before doing some kind of reversal and a reversion to the mean. The only question you might have to ask yourself is, do you want to trade it on the indexes down to the downside, or since it is in a strong uptrend, just wait for the pullback, the 2 or 3 days it takes for a pullback, and then trade it off one of these support areas. These uptrends, these little short pullbacks, can last for quite some time. Going back, your assignment this weekend, if you choose to accept it, is go look at some of the back years. Look back in 2009 when the market was starting to come out of the bear market of 2008. And it jumped on a trend and it would stay on it for quite some time. Right now, on the weekly chart, what do we have on the Qs? We have a hanging man. Again, a bearish reversal signal. So as long as that is valid, it means that the high from today and the high from this week will not be taken out. So, but that is considered a bearish reversal signal. The thing that makes it, I won't say susceptible, but questionable though, is TSI has not turned over. The market forecast slight turnover on the weekly. So it may be sending us a smoke signal, if you will, saying that, hey, the markets are getting ready to take a rest. And that's a great way to approach it from the get-go, is rather than looking for the big, massive sell-off, just say, okay, looking for, is the market going to take a rest right here? IWM, I'll throw these fibs in just for a second. The extension from this swing here from the That is the 28th of December down to the 4th of January. And we rocket shipped out of that, broke out of the little bull flag, broke above the 100% line, and now is pushing on up towards it like it looks like it wants to go up here and tag the 200% line, which is at 211. But it also may have run out of gas. Excuse me. There we go. As you can see, it took seconds hit above the channel line, the upward trending channel. It is extended way past the two-time ATR on the Keltner channel. And so it would not be surprised to see a pullback down into this area. Let's throw a real quick fib on this other one. I think we did that already. If not, we'll do it again. From this move here to this move here, as you can see, it's pushing up 200%. Where else can we do is not really a great move. I can put a Fibonacci from this past move over here down to that. This was a very strong move. And as you can see, we paused for a second on Monday at the 1272. The 1618 is up here at the 216 level. So it's just past that 100% extension off of this past move. So we'll remove that. I'll be looking on Monday. Okay. I do not have a bearish reversal signal on the weekly charts. This is not quite a hanging man, and you may go, well, Dennis, why is that? I think if you do the math on it and look at this candlestick, the lower wick is not 2 times the number, 2 times the width of the body of the candle, and therefore it does not qualify as a hanging man. However, it's close. And so we basically, I will be watching that. If we open down, I'll look for a blast off and a breakthrough up. If I open close to the high of today and then start to sell off, that may be the clue that we're looking for, that we're going to pull on back where? To the 8 or the 20-day moving average. That by that time, here's a little trick you can use to figure out where things are going. Just take your straight line projector out here and just remember geometry class. Just connect some of these dots in there. Oh, darn it. Over the next couple of days, what you're expecting is, let me take that off. There we go. Apply. Boop. Is I can just extend. Let's do a little parallel line there, which is approximately there. And that's where we anticipate the 8-day. If the price action continues doing the same way, on the 20-day moving average, again, I can just do a parallel line, in line, and that's approximately where it would be. What looks good is a pullback into the 201 level on the 14th, around the 14th. So the 14th is 14th, I believe, is next Thursday. So that would be an ideal climb for a pullback. Another way I can take a look at this, and this is for free, I'm just showing you another thing, is to take a look at the time extensions. This last pullback on IWM went from here to here, and then it started moving back up. Go ahead and just do that little same kind of a projection out. And that shows me that if there's symmetry in this pullback and it's 1, 2, 3, 4, 5 days, then the symmetry of that would be right there on the 14th. Isn't that interesting that both of those line up? And it lines up right square dab where? It lines up right square dab on the 201 level. There's only one thing I would need to do to add to this, and that's to throw in a Fibonacci price extension. Again, I measure from this high to this low, go up to this high. If this high here is an important high, and as I drop down off of this, I hit the 718 right there at the 201 level, and the 100% symmetric retracement would put me back at the 199 level. So we've got a little bracket there around that 201 level. Keep your eye on that and design your potential long trade to trigger in around that area. That's a good area of value that that we could potentially jump on a trade moving forward with. So let's get rid of, I'm going to get rid of these drawings. We can draw them in later. So clear all the drawings, bingo. And now we have a clean chart again. If you like to draw on your charts, it's a good idea to go back and just clear the chart occasionally, especially if you've lost the ability to see things on your chart. So that's what we've got going with IWM. Let's jump back over to today's session for our tip for the day. This tip for 2001 is basically stop paying too much for stocks and options. What can happen in the heat of the moment, our emotions and our impulses get cooking, and we think we have to buy something or buy an entity, buy an option right now because it's not going to come back for whatever reason, although we've studied technical analysis forever and ever, and we know that things come back into levels of support. For whatever reason, we convince ourselves, we lie to ourselves basically, and tell ourselves it's not going to happen this time. This time it's going to be different. Well, I could go so many places with that. I'm not going to. I'm going to be nice. And so how do you stop paying too much? Well, one, identify the value action zones for entry. Now that can be based off of asking yourself the question, what moving average line is the entity respecting as it continues to go up if it's in an uptrend or if it's in a downtrend, which moving average line is expecting. Plan a trade around at close to that moving average line. You can estimate the value, just like I drew in the lines on the chart on IWM. I can estimate the value of where prices will be at a particular point in the future, and I can basically lay in number 3, conditional entry orders at those defined wholesale price levels. At those wholesale price levels. I see something I want to modify. It's okay. Well, of course it did. And then number 4, once filled, this is what I like. This is one of the reasons why I really like the doing the trades utilizing the Thinkorswim platform from TD Ameritrade is that it is so flexible in the way it allows you to put in conditional orders. I put my conditional orders in where 1, here's the condition for entering, buying at wholesale. If that order is filled, lined up right below it, it triggers the next order, which the next order is my exit order. So it's the order to both for my stop loss and my profit levels. And I can have it in multiple. You can build, I think, a trade where it has up to 3 OCO orders. And so it really allows you to get in depth. Some people have even taken it further than that. But I like doing that because it truly makes the trade from the time you put it in almost a fire and forget. On the initial entry order, I do make it where it cancels itself out after somewhere between a week and 2 weeks. Especially on an option order, I make it, it'll close itself out within 3 to 5 trading days. On a stock or ETF order where I'm going to buy them long, I basically will let it close out in a week, 5 to 10 days. And so, okay, so that's it. That's our trading tip. Is basically the essence is buy at wholesale, sell at retail, and here's the way you do it. Stop chasing and buy and start buying and selling in defined action zones. because there'll be another defined action zone up here where we exit. Just remember that. So the question I have for you, just please put it down in the comment section, is do you have written trading rules? It's a proven fact that those who have written trading rules will, one, be less likely to violate them. They will be more profitable if their rules reflects a trading system that has an edge, and they're trading the proper stocks and or options and or ETFs that have a tendency to move. So do you have written trading rules? Just drop a note down in the, or just drop a yay or a nay, or a yes or a no down in the comment section. And if you're watching us on YouTube, hey, give us a thumbs up. Let us know how much you basically like the video. Tell us how it's been helpful. Tell us what other kind of videos you'd like to see us do on YouTube. And if you haven't subscribed yet, hit the subscription button. And what else? Oh, hit the bell, and that way you'll be notified when we do put up our new subject, our content every week. And right now I'm putting up 3 other videos every week, and they have to do with the midday, Tuesday, Wednesday, and Thursday at 12 noon. I do a on the radar with stocks, with the indexes and stocks and options, and a trading tip. And it's about 15 minutes where I cover just what's happening, what I'm seeing in the market, and also provide you a potential setup for a trade which could change your trading for the rest of the year. So that's a good thing. So let's go on over to what's next. We'll come right back to that. Let's take a look at the stock I had promised you. Now, a couple of those that, let's see, I didn't get the time on that. The stock that I'm looking at is ZTO. Now, we have traded ZTO, not ZTP, ZTO, which stands for Little ZTO. It's an old Beach Boys song. What it's done is basically it is redefining or coming down into its basing from if you're a trader with not Thinkorswim, but if you're a trader with IBD, you recognize one thing here. You recognize a double bottom type setup. Now they do their double bottoms a little bit different. There's the one swing low, swing high, back down to another bottom, and then a pop back up. Now they basically would say, well, don't take a trade. This would be your early entry. I'm sitting there looking at the TSI and the market forecast, and that's reversing up. That's a really nice bullish divergence. We've got earnings coming up here. When on March, there we go, March 15th, after the market closes. Now what I do is I would run over there. What I want to do, I want to, one, clear my drawings out of the way. I would be interested on Monday picking this up at about the 28.40, 28.45 level. I can do one of two things. Where is it expected to go between now and March 15th? Do I even have a trade that I can go to on March 15th? And the answer to that is found by going over to the options here. And as you can see, I go to February 19th and January 15th. During that time frame, from where it's at right now, it looks like it's going to run somewhere between plus or minus $1.17 between now and the 15th of January, which is next Friday. And then on the 19th, which is add 4 more weeks to that, it's looking like it has a possibility of running almost $3, let's say $2.75. However, and then I can look out here in April, $4.78. But I'm going to go here and say, hey, I think that ZTO, it appears like it wants to go onto a pre-earnings run. So I can jump in here and just grab a position. And I'll show you how to do this really quick. I don't do this for everybody. But so I want to go here to my Theo price. I want to basically drop it down about 46, 40 minus 0.041, so that my price action, and I'm looking, I want to show you where I'm looking on the Theo price, and if I can get it back, which I can't, it won't let me do that, but I'm looking right here. I adjusted it down. I also want to move down the date to Monday. Now, which one of the strikes do I want to potentially get into? I would be looking, I'm expecting it to go down. I can actually buy a little bit out of the money. And with this particular one, the $29 strike price has a delta of 51. If I drop to, down to that level, I would be looking at $1 for the option. This is the theoretical price right here, $1 to $1. So I could just basically take that. I could do a real quick order, and here's what it looked like. I'll show you exactly what it looks like. Jump over here, and I'm just going to do 5 shares, and I'm going to trigger this in. I'll change this to a limit order. I want to pay $1, no more than $1. I want it to be good till canceled. Good till canceled. If it doesn't get filled for me on the 11th, I want it to cancel out by the 15th. After the market closes, which I just use 1600. And where do I want it to trigger at? I want it to trigger at if the prices drop below, you like this, 28.45. There we go. It will fill this order. And then I would lay on top of this order. I'll save that. 5 of them. How much would it cost me to do? It's going to cost me $500. And the price needs to go up to 30 to break even up to $30 by expiration. And if we expect it to move higher than that, the max profit on it is infinite. And this is a directional. I could turn this into a spread very easily. And so that's how quick and how easy it is. If you are interested in potentially trading some options and you just don't know how, go ahead and join us at Active Trend Trading. I basically do very straightforward, simple option trades, typically spreads and some directionals on a limited stable of excellent stocks. And we're just getting ready to roll into earnings seasons, so you can take advantage of doing that when the odds are in your favor in trading the particular options on those stocks, doing a pre-earnings run. So what am I looking at? If price action take off from the 28.45 level, my first level of resistance is up here at 29.68. The next one is up here, I'm looking to my left over here, is up at $30.60. And it could be very easy. How far does it run from this low to this high, down to that swing low? Let's just take a real quick look. That took us there's a 100% line, so that's at $31. And how long would we anticipate that taking us? I can just basically draw this from that same, I'll use the same low, same high, back into the same low. And when is it anticipated to get there? Right there on the 22nd of January. It's anticipated that if price action continue on this trajectory, that's where those two should tag up. So again, if you want to know more about what I'm doing with fibs and or the options, again, join us at Active Trend Trading. Speaking of which, you want to trade, you want my weekly trading plan, this is what it is. It's very simple. I basically I get my setups off the Power Ranked Elite Top 5 watch list. That's 5 of the best growth stocks that come from IBD that are set to beat the to beat the socks off of the indexes. And if you want to know how to get involved with me, you just basically, here's a sample of, ZTO. That's the exact same stock that we're looking to trade right now. This is a stock that we threw in this is just buying the stock itself. That triggered off one of our weekend triggers. And we identified it way back over, I want to say, where do we identified it here. It pulled back to our trigger level. It entered on 421, jumped on up. We took a little bit of profit off at 5%, held on to the rest of it, and took off the rest of the profit at $31.57. And that's where, and this is exactly what we do. We show you every week what I'm going to trade, where I'm going to get in, where I'm going to get out, and both for either a stop loss or a profit target, what strategy I'm using, and what to expect. So if you're interested in that, then just learn how to turn on the AutoPilot switch. You do that with the Active Trend Trader every week. The cost of this service is, well, right now, it's normally about $79, but right now we're offering it for $19.99 per month. And you can get a full year's worth for about $200. So, hey, remember, simplicity is the ultimate sophistication. So sometimes if something looks too simple, sometimes that's a good thing. I like simple, trust me. So, hey, I just want to say aloha, thank you very much. Remember, 2021 is a year for basically rebooting and wealth building. I really am focused on doing the wealth building. Why is that? Is that basically wealth building is how you leave a legacy for your family, for your children, for your grandchildren. So if you're interested in wealth building, join us in 2021. So for the rest of us, of course, we did do the premium members jumped on to the final hour where we did a nice little set up a trade and got the orders out on that one. And again, from my home to yours, and of course this is down in Tahiti. It's not in Hawaii, but there are places here in Hawaii that look kind of like that. And it's warm. So aloha, trade well, and prosper. Keep sharpening the saw. If you have any questions, drop me a note. And mahalo. God bless everybody.